Welcome back guys to the channel, and on this video we're going to learn how to spot the right zones from which to trade from. Now let's get into it, right? So I'll be breaking down this concept through this trade that I took here on USD CAD a while back, which was a terrific trade of about 1 to 20 risk to reward ratio. Now, as we know that order blocks or S&D zones, right? They're always there, right? They're always there, and sometimes they exist in such a way that you could find multiple zones within a single move. Now this adds a very high level of confusion to people, and they end up doing the wrong thing, right? For example, if you have a trend like this, and sometimes you may find yourself having multiple zones within this area that that come to your attention, and you wave off that idea or anticipation on which one to trade from. Now in this instance, I'm going to teach you guys how to spot the most accurate and the most correct zones, and obviously the most probable zones that price will eventually retrace to before that continuation to the top side, right? Targeting the highs as the liquidity runs. Now from this concept here, right, we know that when a trend is forming, right, when a trend is forming, we have a series of multiple highs or lows being formed, and from that we are left with S&D zones. Now the secret to what a correct or a most probable S&D zone is that it needs to have a little bit of imbalances, right? Imbalances above it, right? And what are imbalances, right? Imbalances are those the fair value gaps or the price gaps, right? I have a video on that. If you don't know what imbalances are, then make sure you go to the playlist and watch the imbalances video, right? It needs to have that imbalance, right? Because that imbalance, it adds a little bit of incision to the strength of that order block or zone, in which it's gonna actually force price to come back down, right? To mitigate that imbalance, and also mitigate the order block or the zone before it can start that continuation to the top side, right? So this is a very important tool to consider. And the next thing is that mitigation, right? So mitigation doesn't only happen on imbalances, but it also happens on S&D zones too, right? When you have an S&D zone like this, you need to have that S&D zone unmitigated. And why am I talking about unmitigated, right? When an S&D zone is being formed, there's normally price movement of an up and down manner. Now normally you would see that price would come just a little bit shy off of this zone and then continue with the move, right? So that when it comes back to the future, right, when it comes back to the future, price could come, mitigate this area, and then continue. So that's the secret to a correct order block. Now we're going to see all what I've said in here through live examples in the actual charts. Okay, so I just need to get these off and I'm running. So let's go back. Let's actually zoom out. Let's go to the 4-hour and start making a little bit of sense on what I'm saying here, right? So it had this 4-hour trend, which was moving bullish, right? Which is moving bullish, creating highs, and then price now shifted towards bearish. Okay, so now we know that price is moving bearish, and hence if price is moving bearish, then we will see a potential series of lows being made, right? In terms of lower lows and lower highs. Hence, what we had here was a lower high that came in, took out this structural low right here, and created a brand new lower low right there. Hence, from the high to the low with a breakout structure, we now know that price is definitely gonna make its way back up for that mitigation before it could continue with the trend downwards. Hence, we now need to see that area of supply. In this case, since it's a bearish trend, we need to see that area of supply that's unmitigated at the moment, and also contains a little bit of imbalances, or that fair value gap, or the price gaps, or whatever the fuck you want to call it. Hence, when you come back to the charts, so in here we have multiple zones, right? And all of them are pretty much valid for me, right? So we have this original move here that initiated the trend, in which it is also the move that broke structure. That's why it is very it was very it was highly it was highly attractive and regardable, I can say, right? So it was very important to regard this area as a potential supply zone in which price is going to make its way back into for that mitigation before the continuation, because it was the original move that broke this structure. But also we did have um, that I don't know what they call it, discount level. We also had this I normally call them intermediary, so, or continuation, right? So we also had this continuation area of supply right here, in which price broke structure, made this intermediary high, and then broke again. Now and the other importance to know is that, you know, you also need to know how liquidity operates, right? So it would price could easily have come here, mitigated it, and then left off. But due to the importance of the um, liquidity concept, right? We had these equal highs on top of here, which made this area very very hostile to price action. So price comes up into the area with a very strong push and then liquidates it, right? So this, I mean, this could have been a good area for sales, right? I mean, after the liquidation, of course, in which I'm pretty sure in here, price did break down in terms of the in terms of the intermediary timeframes or intraday timeframes, right? Price made a breakdown, and you know, you could have caught a sell in here or a sell in here. They were pretty much valid, but you know, obviously at the end of the day, you're taking out a break even, and you know, it is what it is, and that happens. Now, from that being said, like I said before, this is the area that initiated the move to break the structural point. Hence, price went back, respected this area, and now gave us confirmations towards bearish price action, in which we had multiple entries in there. But the main entry that I want to talk about is this one. So let's go back to the 15-minute time frame, because that's where I start. You know, it is what it is. I'm a day trader, and it's part of my system. So here we are. What we were having was this, it was just a simple pullback. So we know that price made this low, and price was gonna pull back. The low was created from that high. So from the high to the low, and price was gonna pull back into an area and then break off again. So as this price was pulling back, we now saw something like this, which is pretty much interesting, right? Boom. So let's make this big and analyzable. There, so we had this trend forming with a series of highs and lows, high, a low, and then from here, price now comes up and fails to take out this high. Price fails to take out this high, but in turns does what? It just liquidates this high, meaning what? It's a potential end of this bullish trend. And after that, what do we see next, right? Price comes down and takes out the low. Okay, so price has taken out the low after liquidating a high. What's next, guys? This market is as bearish as it could ever get, right? So price makes now a low, which originated from this high right here. And from there, we have this area of supply. We had that area of supply right there, which was pretty much refined to this area here, right? And price comes in, taps it, so that right there was our first entry to go short from there. And lo and behold, price now breaks off, creates a new low from this high. And now we have this area right here. Now, let's look at this area, and why did I choose this area, right? All right, so in this area here, right, this is where price goes up, right? As you can see these long pivots right here. So this is the bullish push that was initiated to trigger this very strong bearish move that comes in and takes out this low, creating a what? A new low. Hence, for me, this low right here. Hence, for me, this right here, this was the last up move before the down move, aka the order block, aka the supply zone. But I then refined it to this little area right here. As you can see, this this candle in here, right? I don't know what price action price actionists will call that. I don't know, is it a hanging man or whatever it is, right? I don't really care. It's not really part of my arsenal. Now, from there, price now began to make its way back into this area, right? So from this being the area that price last bought before it sold, look at what lies below it. um let's go back right there, right? Look at what lies below it, right? We have all this area right here of imbalance, right? This imbalance right here. So this imbalance right here makes this zone to be very much potential. Why? Because this imbalance is going to draw back price up to mitigate this imbalance, and while it's mitigating this imbalance, it's also going to be a part of that move that price comes in and mitigates this supply zone 2 or this order block to trigger the institutional orders that were left in here to take price very rapidly down. Now let's look at what happened, right? So from there, price began to consolidate, right? Creating this range right here, right? And as I said before in that liquidity video, that a range is simply a move of price building up liquidity on both sides of the markets, right? So we have the so-called buy side liquidity on top of here, and also we have the sell side liquidity down here, right? So price is basically building liquidity on both sides of the market, and lo and behold, price now comes up, takes out this liquidity, comes up, mitigates this this zone right here, this supply zone or this order block, triggers my entry, right? My stop loss was there, never touched, 8 pip stop loss, and then price moves with this shocking move down. I believe this was news. I just forgot which one. It was pretty much a while back, right? So this is how you spot, this is how you pick the right zones to trade with the banks. Now, I hope this piece of information was very much informative. Now, as you can see, price went down, ran perfectly towards our take profit target right here, which initiated to be a 167 pip take profit target with an 8 pip stop loss, leading to a 1 to 20 RR trade. Now that's it on this one. I hope you found this piece of information very informative, and if you did, then don't forget to like the video. Of course, subscribe if you haven't, turn that bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week, and of course, peace out.